June 3rd, 2025. And let's talk about the Bitcoin and altcoin markets real quick. What is happening with Bitcoin and altcoins? You might have noticed if you were paying attention to the charts yesterday, if you saw the Alpha Trading live stream, we gave you very solid probabilities to the upside and the downside and sideways. And the upside targets got nailed. Not a big surprise there, given the way things are going on the day's volatility and on the lower volatility and entropy and probabilities and statistics. And we saw those targets get nailed relatively shortly after the live stream ended, right? We had the finishing maneuvers to the downside shortly after the live stream ended, and then began the climb, the climb back up to where a lot of things had started the day, and then they even surpassed it a little bit by the end of the day. Started a new calendar date, or a daily time frame, if you will, daily time frame candle. Popped up a little more and came back down a little bit today so far. There's still a lot of good indications of probabilities to the upside again today. However, it certainly is a little bit more mixed, and definitely you want to keep an eye on the lower time frames because there certainly are downside targets very much at play. Some people will say, well, that was a relief rally. Listen, there's buy pressure and there's sell pressure all the time. Sometimes there's more buy pressure, sometimes there's more sell pressure. It's one or the other. And when, prices follow the returns to a relative low, it's quite typical that you'll have people buy. Well, the smart money will anyway, at the lows. But the panic sellers, the retail traders, will typically sell at the lows because they don't know what they're doing. And then the panic buyers, retail buyers, well, the majority of them will buy at the highs. Right? So they're doing all the wrong things. And the smart money will sell at the highs. So are we at a local high again? Are we inevitably going to come back down now that a lot of assets have tested things like the reverse wave trends to the upside? Some of them are still way above the reverse wave trends to the downside. Depends on the asset and the time frame, right? Well, it certainly is possible that we continue to see an upward momentum, or rather movement, today with the returns that could drive prices higher. However, right, there's a lot of information that shows, that little bit of a buy pressure experience was what it was. It was short-lived. I hope you enjoyed it. Hope you took your profits. Because for now, at least the last I looked at the charts maybe a half hour ago, things were looking a little bit to the downside for Bitcoin and a bunch of altcoins. Now, that doesn't mean every coin is going to go down necessarily. Obviously, you're going to have a lot of correlated assets that, because they're so pegged with each other, that of course they're going to move very similar to how their mother coin is working or moving. But there are differences, right? And there will inevitably be some that move up as the rest move down, or some that move down as the rest move up. Right? There's always going to be outliers that are performing in the opposite direction to the mainstay of the pack. I can't see your message here. Sorry, it's just so bright here. Oh, hey, you like and sub. Hey there, how you doing? Thanks for the sub. So if you look at the normal distribution probabilities on the day and the Laplace distribution probabilities on the day, you see some very nice ranges if you look at the VEPS charts. If you're not familiar with the VEPS charts, go ahead and get your free access to the volatility, probability, and statistics indicators that we literally give away at Alpha Trading, so you can learn the basics of trading volatility, probabilities, and statistics. It's really, we call it the basics, but it's a very powerful set of tools that you can actually use to trade very well. There's a lot of traders really in Alpha Trading who use just the free tools, and they're perfectly happy with that, and they use those forever, and they're entitled to keeping those as long as they're in our Discord. And you can just go to alphatradinghq.com/Discord, go to the request support channel, click the create ticket button, and then in that ticket, you just got to say you want your free access to the volatility starter pack, and be sure to include your TradingView username so that we can hook you up with those indicators and all that information, all the educational information that we give you with that, as well as access to the chat channels where people talk about these things and where we share charts and insights and people ask questions and they get answered. And you can participate in the live streams and, not just watch and listen, but actually ask questions and join the discussion, etc. The whole point of the live streams are to be educational. So if you're brand new to it, you probably just want to, listen for a while and pick up on what we're talking about. But you can always interject if you have questions, etc. You want to know how a chart, how the indicators work, things like that. If it's not clear to you in all the educational material we provide, that stuff is pretty thorough, to be honest. But hey, there's always people who have questions, and that's what our community is for. We created the Alpha Trading community so that traders don't have to get wrecked by using bad information tools that are the kind that you use in traditional TA, right? Because those are all based on lagging information, and we don't use that. We use the same information that are used by the high frequency trading firms or HFT firms and the quantitative algorithm trading shops, right? Or quant trading shops as they're known, or just quant shops, right? They also build algorithms for themselves as well as for big clients. Like some HFT firms will hire them to build algorithms for them, etc. But the point is, all of these companies that use these quantitative methods of trading, they base all their maths on the same things we base our maths on. So we don't care about Fibonacci's and support and resistance levels that are manually drawn, right? Or order boxes or all these channels and flags. And it's all nonsense, right? That's literally stuff that is used by what the smart money calls the dumb money. So if you're the dumb money, it's because you use that stuff. You're honestly better off not looking at any traditional technical analysis and just dollar cost averaging, right? And not trying to be a trader. You'll make a lot more money than trying to trade with technical analysis. But if you do want to be a trader, then you shouldn't be using that stuff. And anybody who tells you should is either naive or ignorant or is lying to you. Maybe a bit of all three, right? Because there's no reason to think that you're going to be the outlier. Like, yes, some people do make money using traditional technical analysis. I made some money using traditional technical analysis. It was great. But the only reason I made money using that stuff is because I had very tight risk management. That's the only reason, right? If I literally used the tools strictly as they were meant to be used, I would definitely have lost more money than I made. But because I have very strict risk management, I didn't. I made money. But as soon as I really comprehended the better way to trade using volatility and probabilities and statistics, I immediately switched and have never looked back. And it's been a bunch of years, right? More than several. It's been a good number of years already. And I would never touch traditional TA again. That stuff is just utter garbage. Sure, if one day we woke up and all of a sudden traditional TA was proven to work again, or at all, ever, and suddenly it was discovered statistically, you could show me, oh yeah, no, this works better, because all the algorithms have been changed at the HFT firms and now they all use this voodoo stuff, then sure, we'd use that. But the fact is it doesn't, because they don't. And that's such subjective chart art that it's simply foolish to use it. Right? The algos are huge bots. The bots don't have time to sit around and draw ridiculous subjective lines, triangles, and silly things, and try to interpret what each of those things means and try to understand the so-called market sentiments based on news and information that doesn't matter. Right? They're quickly calculating the same calculations that we're looking at with our tools, and they're running millions of trades per second. So good luck beating them. But our job as traders using leading information is not to try to beat those bots. It's to be on the same side of the trades as those bots. Okay? And we can tell what they're generally doing on different time frames, from the very high time frames all the way down to the very low time frames, because we're looking at the same maths as they are. Now, granted, we're not going to run millions of trades per second unless we happen to work at one of those firms and we have access to those huge bots that can run millions of trades per second, right? Reliably, using those same maths. And you could argue and you say, well, I could build one of those bots at home. Yeah, sure, you can build one of those bots at home. It's not going to beat the actual bots at the HFT firms. They have massive amounts of computer power. They're literally hosting their servers in the same rack, or the rack right next to the rack of the actual market rack. So their cable that connects directly from their server to the exchange's server is physically as short as it can be. And yeah, I know there's at least one, maybe more, exchanges that supposedly allows or has some kind of a way to level the playing field so that all the traders there have the equal, the same entry and exit timings. But the vast majority of traders still trade on exchanges that don't do that, and the vast majority of exchanges still are hosted in the main places where people are, where big brokerage firms and big trading houses are connecting to them directly and getting faster times than you are on order book information, order flow information. They're getting faster information than you are, basically. And that means that they're going to have better trade outcomes than the average retail trader, no matter what. They're even going to have better trades, by the way, than the average institutional brokerage house that doesn't have all that same setup. Right? Okay, so keep that in mind. They're not just messing with you as a retail trader and taking advantage of the delay that you have compared to them. No, they're taking advantage of that difference for everybody that's trying to trade against them, right? They're screwing over everyone, whether they're a professional trading house or not, right? I mean, they literally are screwing over everyone. So you're not the only one they're screwing over. They're screwing over the entire market. They say about unrest. Beware. You're probably better off not trading them, to be honest, if you don't know what you're doing. So that's what I have to say about that. Stay safe. Happy trading. Look for the Alpha Trading live stream today. It'll start at 11 a.m. U.S. Eastern Time, as it does every day, Monday through Saturday. And yeah, we'll catch you later. Peace.